George Vera here with Simple Lending Mortgage. I just wanted to do a little video today. I wanted to touch on some subjects and topics that are coming across my desk, and I'm seeing more frequent than not. And it's starting to come around now with the stimulus checks. And I wanted to touch on these very important things. If you're looking to buy a house and you're looking to becoming a homeowner in today's market, it's already statistically right now on this April to around October, the market goes completely insane. That's where everything just bursts. But if you already been watching, the market has been crazy for about a year and a half now. So it's only going to get crazier. One of the things that I'm noticing is that with the stimulus checks, this is some suggestions. Again, if you're looking at buying a home, that I'm noticing there's a lot of misuse of these funds. And my suggestion to you is, if you're already in mind of buying a house, if you're in the market for buying a house and you did receive a stimulus, consider saving that money for a down payment. Consider saving it for closing costs, or consider saving it as reserves. Let me tell you about the closing costs. I know everybody has a friend or a family member that has bought a house recently, maybe about a year back, and the whole story goes, they only did the down payment, the seller covered the closing costs. This is a seller's market. What does this mean for you? It means that the seller is fully aware that they're going to sell the house at top dollar, even above asking price. And they know that they don't have to give you any seller concessions, because if you don't buy the house, there is about 100 other qualified buyers that will, who are not only not asking for seller credit, but they're even going above the asking purchase price. So you want to be in today's market to have closing costs ready. You want to have that available to you. And if you did receive the stimulus and you're about to get a tax refund, this is where you put that together. This is your slush funds. This is down payment and closing cost money. If you're slightly credit challenged, one of the things the lenders look for, especially when you're doing manual underwriting, is reserves. Reserves is whatever your principal, interest, taxes, and insurance is, your total mortgage payment. They want to see that you have at least 2 months of the PITI saved up after down payment and closing costs. So even if you did save it for reserves, you're still creating that slush funds that would help you be stronger qualified buyer in today's market. So please use that wisely. And I bring this up because I have just unfortunately had to give some bad news to 3 consecutive applicants because of the stimulus, and because right now everyone goes crazy, right? Every car dealer is saying, bring your tax refund, bring your stimulus, and walk out with a car. And you're buying this car, and it's great to have this new ride. But if you're in mind of buying a house, think about this. It is so easy to qualify for a car loan. It is almost a non-brainer. The only difference they're going to apply to you right now, they're going to go ahead and throw away the down payment, and they're going to give you nothing at closing, and they're going to give you this 0 APR, and they're going to put you in this $500, $600, $700 monthly payment, which, yes, in your mind, you can afford it. But keep in mind this: when you buy this car and then you call me that you want to buy a house, and we're looking at debt to income on the ratios for a loan, which is a lot tighter than what that car dealer used. All of a sudden, you don't qualify by $200. We just blew the numbers out the water. And we can look at everything in your credit cards, loans. What can we pay off? What can we reduce? What we can get rid of? And the one thing that we can't move is that car payment. And I don't know if you knew this, but you could buy the house first and still go to the car dealer afterwards, and you will still get the car. But now you got the car, but not the house, not in today's market. And that is simply because debt to income ratios. So I know there is a lot of selling, there is a lot of pushing, there is a lot of advertising about bring me your refund, bring me the stimulus, but be mindful. I know we've been quarantined, I know we've been limited to a lot of things, and there's a lot of way of life that has suffered. But if you're thinking of buying a house, prioritize this over that, because it will throw all the numbers off. One of the things you could do with the stimulus, for instance, for my veteran buyers who are probably watching this thinking, well, I don't have any down payment and I'm in the market where the sellers do cover the closing costs. Well, what about using the stimulus to buy down your interest rate? Interest rates are shifting. They're going up. I don't care what realtor or lender is watching this thinking that their rates are historically low. They are not. Every lender is pushing the rates up back into the threes and away from the twos. Now, to get those rates that everyone heard and got accustomed to seeing all over their Facebook feed last year, they all now come with discount points. That stimulus could be the perfect monetary tool that you could use to buy down your rate and get a lower rate. It was free money that was sent to you, and you can use it to get a lower rate on your 30-year fixed mortgage. So again, I just wanted to keep it short and simple. It's just things that I'm seeing. It's too many, too frequent, and I've had to deliver 3 consecutive customers to bad news, and it was over a car, and it was just purchased. So, and talking with the customer and being honest, real, same thing. They got the stimulus. They thought they could use the new ride. The qualification was easy. You know, their budgeting in their mind, they could afford it. But what they weren't accounting for was the debt to income ratio that the lender actually uses. So just because you can financially make all of these payments does not mean that on paper the debt to income ratio is going to be blown out of proportion. So I hope this is useful. I hope that some of you were in need to hearing this and knowing more. If you have any questions, always you can hit the like and share. Help me with the Facebook algorithm so that we can reach more people. You can leave me a comment. You can always message me through Facebook like some of you have already been doing. I always put my emails in a lot of my posts. You can always reach out to me, and always take advantage of our SOS, Second Opinion Service. We're here to answer any questions. You don't ever have to take a firm answer from another lender because, like I've said in a few different times in videos, sometimes the lender will preach truth based on their lender's guidelines and limitations. Benefit of the broker, when now you have over 25 lenders, you have a lot of different windows, a lot of different boxes. And even if I'm not able to give you the answer you want, you're going to get the answer that comes directly from the program and not from the lender's smaller box, if you will, because we got to account for overlays. A lot of these lenders have overlays. So again, let me know if you have any questions for me. Please hit a like and share. Help me with the algorithm so I can reach more people with useful information. Let me know if you have any questions and what else I could maybe provide that is useful to you. Thank you, and you have a good one.